Okay, guys, so I'm recording a video here to talk about Doge, talking about fiscal spending, how it relates to expanding money supply, and I guess just my general thoughts on what's going on here. So you have a lot of Bitcoiners that are saying, well, if they can get the spending under control and this isn't continuing to expand like crazy, because we're just spending on things like US aid and all these things that are just hot topics in the news right now, then Bitcoiners have an issue because they're just not going to keep expanding the fiat money supply. So let me dive into this. Let me talk about, well, you'll see. So here's my thoughts on Doge, and I want to preface this: everything that they're doing with Doge right now, I mean, I'm very excited about it. The fact that they're finding all this fraud and abuse and things like that they're going into, like, this is desperately needed. I just think it's a little late, and I'm very suspect as to how much of this cutting and reduction in the fiscal deficit that they're going to be able to do. So here's the reason why, and let me take you through it. Okay, so the first part that I'm going to cover is understanding the current fiscal landscape. Before we dive into the specifics of Doge, let's set the stage by looking at our current fiscal situation. In fiscal year 2024, the U.S. federal government spent about $6.8 trillion. Of that, roughly $4.9 trillion came from the top line income coming into the country, leaving about a $1.8 trillion deficit between the two of what they're spending going out the door versus what they're bringing in. Now, here's where it gets interesting. Our total spending breaks down into two main categories. You have mandatory spending and you have discretionary spending. The mandatory spending includes things like Social Security, Medicare, Medicaid, and in 2024, this accounted for about $4.13 trillion, or roughly 60% of the total spending. So then we get into the discretionary spending, and this covers everything else, including defense, education, transportation. So when Doge talks about, and this is coming from Elon back in August, he had thrown out this number that Doge was going to cut $2 trillion. And this is an incredibly ambitious target that would require fundamental changes to how the government operates and how it's. And I think people looking at what's happening with Doge on the surface would say, well, that's exactly what they're doing. And they are, but I think once you get into some of the numbers of what it is they've cut so far and like what these numbers really look like, I think, we'll see where they're at after 2 years. So the next thing I want to talk about is the challenge of cutting the spending. So now that we understand the scale of what's being proposed, let's talk about why it's so difficult to achieve it. I also want to say this. So Elon threw out this 2 trillion number about 6 months ago whenever they were campaigning. More recently, he said that the number is more like a trillion and that their target should be 2 trillion, but they're probably going to be able to accomplish 1. So first, remember that the mandatory spending programs like Social Security, Medicaid, are legally required. They're not just line items in the budget that can be easily reduced. These programs are entitlements that millions of Americans depend on. Cutting them would require major legislative changes and would likely face like massive political wins that I don't think they're even going to attempt. Even with the discretionary spending, cuts are not easy. Like, let's look at the defense spending, for example. In 2024, it accounted for about $877 billion. And while that number's massive, reducing it significantly would have major implications for national security and would face strong opposition from all the different stakeholders. And this is what people need to understand about defense spending. The way that this gets done, like if you look at the F-35 Joint Strike Fighter, this is a perfect example, where they have stakeholders in every single state so that these billions that they're spending on defense are being kicked into, you name it, whatever state where this work is being performed. And so from a political standpoint, all these representatives that represent these districts where all this money is being flown in, being pushed into, are going to throw a tantrum. And not just from the judicial branch like we've been seeing that is trying to protect. It's almost like this immune response to any type of cuts that are happening. The government blob is going to throw a fit. And I think that people are totally underestimating what that looks like from a defense standpoint. I'm not saying it can't be done. I'm very suspect as to how this is actually going to play out in reality. Moreover than that, many government programs have strong constituencies. Education funding affects teachers and students. And so like you push outside of DOD into the education front, they call it colleges, whatnot. And I think you're going to just have lots of fights on their hands. So when we talk about 2 trillion, which is the target that they're really trying to go after, with maybe 1 trillion being the reality that they could potentially achieve, we're just not talking about trimming some fat. We're talking about fundamentally reshaping the role and the scope of federal government and all the stakeholders at play that have their hands out wanting their cut. So let's talk about the global economy's dependency on expanding liquidity. And this is the part that I really, really want to get at. So let's zoom out and look at the big economic picture. One of my main concerns with drastically cutting spending is that they overlook how the global economy functions in a fiat reserve, fractional reserve system in relation to the money supply. The global economy is heavily dependent on this continual expansion of these fiat units. M2 is the broad measure of the money supply that includes cash, checking deposits, easily convertible near money. There's a strong historical correlation between M2 growth rates and asset prices, including stocks, including real estate. So when M2 expands, it generally leads to lower borrowing costs and increased liquidity in the financial system. And this in turn tends to drive up asset values. For example, let's look at the period following the 2008 crisis till now, and I'm going to throw up a chart so you guys can see. The Federal Reserve's quantitative easing program led to a significant expansion of the money supply. This coincided with the bull market in stocks that lasted over a decade. And we can even compare this and look at this compared to the income that the federal government was receiving because of capital gains associated with this expansion of the money supply that then was being pushed into asset prices. And so this relationship between the money supply and asset prices isn't just about making investors feel good. It has real implications to the broader economy and crucially to the government's top line. And if we're talking about deficits, a key component of calculating the deficit, which is the top line versus all the expenses, is that top line. And if the top line is contracting, which you can see on the chart happens when we have a down year in the stock market because the M2 money supply wasn't expanding, all of a sudden you're making your deficit problems even harder. So how does this relate to government spending and revenue? It's all about the wealth effect and capital gains. When asset prices rise, people feel wealthier. This often leads to increased consumer spending, which drives the economy growth. More importantly for our discussion, rising asset prices also lead to increased capital gains and when those assets are sold. So this is something that I think people are underestimating. So if you start doing all these cuts and all this reduction in government waste, you're adding less liquidity into the system. You're adding that M2 is going to contract, and they can't have it contract if they still want to have a top line that's in comparison to all the spending that they're doing. Given this relationship, one of the biggest risks of drastically cutting government spending is deflation. If we reduce government spending by 1 to 2 trillion, it could lead to a significant contraction in the money supply. This in turn could cause a drop in asset prices. Okay, so I'm not saying that this can't be done, that they can't, cut some of the spending. But like when we look at the discretionary spending and what's happening, there's not a whole lot of things beyond like what we're already raising in tax receipts that they can cut. When we look at this USAID thing, let's talk about USAID. So their budget, just to kind of put some context on this, their budget was, I want to say it was $44 billion was the budget for USAID. Let me look up the number real fast just to make sure I'm saying this correctly. And because of that, hold on here, fiscal year 2024 managed approximately $32 billion in foreign assistance as part of a broader $63 billion budget for foreign assistance and diplomatic engagement by the State Department. But the amount that was directly attributed to USAID is $32 billion. When you look at this chart of the incomes and the expenditures of the federal government, That bucket, okay, as you're looking at all these trillions and billions, that bucket is down there at the very bottom in other, okay? And you can see other encompasses $311 billion. And so U.S. aid is 10% of the other column, just to kind of put some context on this. So they can axe that entire thing and they can kill that whole thing. But when we're looking at like how much in like the grand scheme of things they are, reducing, it's very small. It's extremely small compared to like what's actually happening. So in conclusion, this is what I would say. I want the fraud, the waste, the abuse. Nobody wants that more than me. Let me tell you, I'm like liking all this stuff. I love it. I'm a numbers guy. I'm looking at the numbers and I'm looking at how much, non-discretionary spending there is. And I'm looking at the tax revenues. And I'm also looking at just the sheer fact that when we have a down market, stock market, asset prices go down because the money supply is, contracting. There's not liquidity in the system. And a lot of these moves that they're doing to cut spending is deflationary and sucking liquidity out of the system. So they're going to have to offset that. They're going to have to put more fiat units into the economy somehow. Now, whether they do that by more QE, I suspect that's probably how it'll happen. Those units are going to come into the system somehow, some way, and it's going to keep expanding. It has to, or else they're not going to have the tax receipts to kind of even keep the deficit where it's at. You've heard some politicians going around saying, well, if we can get some of this spending under control, then the yields in the fixed income market will go down, which, might be the case. I think the rest of the world is doing this math that I'm showing you right now, and I think they're a little suspect as to like whether that's possible and like how meaningful that would be. Who knows if they're going to do something like yield curve control to keep the yields lower? I don't know, but that would be adding more fiat units into the system. So what? As a Bitcoiner, I'm looking at this and I'm saying, okay, let's say the US can kind of get some of their spending under control. That might be deflationary, but it's going to make the dollar rip relative to all these other fiat currencies, which then they're going to have to open swap lines or do something to get that under control. So here it is. Fiat money that's not backed by anything is the Ponzi scheme of Ponzi schemes. And you can't win at a Ponzi scheme if you're not cheating better than the other country's cheating. And so we look at all these numbers, we hear all these things, they're wonderful. I'm excited that somebody's trying to do something about it. But I'm also looking at this and saying, it's still a wonderful time to be a Bitcoiner because I think the expansion of the M2 fiat money supply is just going to keep on ripping.